welcome to Ember Webinars. It happens every 7 p.m. on Thursdays. We went on some 2-week break, but we are fully back. So today we are having finance for non-finance. And let me just briefly read the profile of our speaker or trainer for the day. So Dixon Asen is a chartered accountant and a career coach with over a decade of experience in accounting, compliance, and professional development. He currently serves as the Operations Manager, Finance and Compliance at Lantini Limited, where he leads financial operations, ensures regulatory compliance, and drives strategic decision-making to enhance business growth. Beyond his corporate role, Dixon is a recognized thought leader in career development, boasting an impressive 49,000 plus followers on LinkedIn. Chai, Dixon, for help my LinkedIn, where he shares valuable insights on career growth, financial management, and personal development. His expertise and dedication to empowering professionals have earned him invitations from esteemed institutions such as MasterCard Foundation, Srinko Academy, University of Ghana, UPSA, European Union delegation in Ghana, and others to provide CV writing, interview coaching, career advisory services to students and young professionals. Academically, Dixon holds a first-class Bachelor of Science in Accounting. Yay, he's sharp. From the University of Professional Studies and a Master of Science in Accounting and Finance from the University of Ghana Business School. He's a proud member of the Institute of Chartered Accountants, Ghana. In addition to his leadership at Latini, Dixon is deeply committed to youth mentorship, career empowerment. He serves as a project lead at Career Compass Ghana Limited, a dynamic organization dedicated to equipping young professionals with tailored career guidance. He is also the convener of Young Inspirators Network Ghana, a vibrant community fostering inspiration, networking, goal achieving among young professionals. As a strong advocate for education and social impact, Dixon founded the Career Compass Ghana Foundation, through which he has made significant contributions to underprivileged communities, including over 1,300 exercise books donation to students of Hafiakpo Basic School in the Volta region. Above all, Dixon is a dedicated family man, a loving husband, and a proud father of 2 children, a son. Hey, Dixon, why you just got married? You have 2 kids already, my brother, and a daughter. All right, it's good to have you here, Dixon. Can we see you? Can we see you? Can we see you? Beautiful. All right, my brother, you are not wasting time. I saw your save the dates a few years ago. Yeah, club two, my brother. Good to see you. Good to see
Yeah,
you.
it's good to see you.
Wonderful.
I think the last time we met, it was at Holiday Inn, I guess.
Yes,
Yeah.
yes. That was a while back. But we should meet more. I'm glad that you've graced our platform with your presence,
Yeah,
and I'm sure we'll be very empowered. So let me not take too much of your time. I'll give you the floor, and then please enlighten us. Thank you so much for making time.
great. Thank you. And good evening to all, and welcome to this webinar. Tonight, I have a very simple task, and my task is to basically help you, guide you in how you can manage your finances as non-finance managers. I'll be more tilted towards startups, and the entrepreneurs that we have on this call. And I hope that by the end of this session, you will be enlightened enough to run your finances better as a business owner or as a startup. Let me make this point that the aim is not to make you accountant over 2 hours or 1 hour, or make you finance managers over 2 hours, but it is very important that whichever role you occupy in your organization, whether you're a business owner or you are you are an employee, you need to have very broad and deep understanding of finances, because at the end of the day, whether the business will grow and make more money and thrive will depend on how best you're able to do this. So please take notes. Also, mind you that what we're going to share might not apply to all businesses, because businesses vary, and depending on the the nature of the business, the application of financial management might differ a bit. And so generally, everything we will discuss will more like affect every business, but there are certain aspects that will not affect all businesses. So kindly take notes. If you have questions, please do well, put them in the chat box as we go along. And then after my presentation, I'll give you the opportunity to ask all the questions that you have. So let's get started. Will you help me with my slides? I don't know whether she's on the call.
Yes, please. I'm on the phone. Let me check.
Kindly help me. Thank you. If it's a difficulty, yes, I can maneuver it from my end as well. Okay. Great. So, are you putting a slide mode for me?
Yes, please. I have.
Okay, great. So once more, I welcome you to this particular webinar. And tonight, I have a task of taking you through financial management for non-finance managers. The whole idea is to give you key insights for your startups and also for those who are entrepreneurs, something for you to take home and run your businesses effectively. In terms of your finances. So let's go to the next thing on the slide. Okay, so I've already been introduced, so I don't need another introduction. Please, let's move on. Okay, so let's look at tonight's agenda. What do we seek to achieve? What do we seek to achieve by the end of this session? Please roll me on. So by the end of this session, we hope to learn something about startups in Ghana. This will be just a brief part because we need to understand the context for which we are talking about financial management in Ghana. But we also need to know what even financial management is all about. Please, this will be very basic definition of financial management. I'm not going to do a lot of deeper details, but we're going to touch on the key financial statements that you need to know as a business owner, as an entrepreneur, also as a startup, or even as an employee in the organization. You need some of these things so you can contribute effectively, even if you go for meetings and all of that. Then for startups and small businesses, we need to know how to manage our cash flow. So I'll give you some key tips. And these tips are not theory. These tips have been born from the experiences that I have gathered working with startup businesses over the years. And then we will learn a little bit about budgeting and forecasting. This can be another topic for a whole day on its own. So maybe on another session, we might have an opportunity to learn about how we can budget and forecast effectively, and not just sit in our rooms and conjure some numbers and think that will work for our business. Okay, then we also will touch a bit about, okay, where can we find the money to run the business? Okay, where can we find the money and what are the advantages associated with each of them? If you go to the bank, what is even the bank looking out for? If you go to an investor, an angel investor or a venture capitalist, what are they looking out for? We will learn some of these things today. And then, of course, bookkeeping. We will do all of these things and then wrap it up in technology, how we can apply technology to get about all of these things that we're going to learn tonight. So please fasten your seatbelts and let's get ready. Indeed, there is tons of research about startups in Ghana, and I have just taken 3 out of why they fail in Ghana. The statistics are out there for you to read about, but just for you to know, only 1 out of, per the statistics, only 1 out of 10 startups in Ghana will live up to 10 years. The rest will fold up over time. And the reasons why they fold up, the World Bank has given us some reasons why they fold up within that time. and some of them limited access to funding, inadequate managerial skills, and infrastructure challenges. For infrastructure challenges, these are things not within our domain, so we will not even bother our heads. Our heads will be bothered on two key things: managerial skills, and then how we can use even the managerial skills to manage the limited funds that we have. So basically tonight, this is going to be key in our in what we are trying to achieve. Let's go to the next thing. Now, a lot of businesses or business owners in Ghana, per the statistics, both from the Registrar General Department and also even from the Ministry of Finance, tells us that most of our entrepreneurs are not finance inclined. Okay, so they didn't study or they've not learned about accounting, finance, and all of these things. So basically, we call them non-finance managers. But then, if you are also an employee, you are also a and you are not in finance accounting, you are also a non-finance manager. How can what are some of the challenges associated with non-finance managers when they run their businesses in Ghana? So the records show that yes, limited financial literacy is an issue, and then we have inadequate record keeping, we have poor cash management, and lack of financial planning. Indeed, some of them intertwine, and we will try and dig into some of them before we leave this place. So please take note of these challenges, and at this moment, I'm going to take you through some of the key things you need to know when it comes to financial management. And it is about a simple definition I have tried to put together because you are not finance people, so I'm not going to bother you with jargon. But if we talk about financial management, I want you to understand it from this perspective. That one, financial management will help you know where to get funding. Okay, so you want to start, somebody said they are into, if I got the person right, let me see if I can get a name. Let me see. I think Dominic spoke about the fact that they use plantain something to develop egg crates and those kind of things, if I got him right. Okay, so you need to ask yourself, where can we even find the money to even start this business? So financial management will help you understand, okay, where you can find the money. Okay, when you get the money, how do you even track the money? Where is the money going? Is the money going into your pockets? Is it going into your house? You spend it on your family. You spend it on where? Do you spend it on the business, the core activities of the business? Financial management will help you track where these monies will be going. And so we will learn how to even track these things, and we will be fine by the end of this session. Financial management also will help you know even where the money is coming from. Okay, so here we are talking about your revenues, your sales. Where is the sales coming from? If you have varieties of services that you provide or varieties of products that you sell, you need to know which one probably is even bringing in more sales, which one is not. That will help you know, okay, where to actually put your money, because obviously the one that is bringing more cash or sales will need more investment to bring in more. So you need to understand that this is one of the things that financial management will help you do. Then it will also help you how to plan wisely. And I use wisely in context. Please don't be offended, okay? Because the thing is that we have learned earlier that due to lack of adequate funding, that is why one of the reasons why most SMEs or startups fail in Ghana. So it means that we do not have the resources in abundance, and hence we need to sieve it, such that we go according to the plan, and the things that do not matter, we do not spend money on them. And so budgeting is part of financial management, and I'll highlight it briefly in this presentation. You also need to know that you run your business with cash. You need to pay bills. You pay bills with cash. You don't pay bills with your mouth. You pay bills with cash. You don't pay bills with, promises. You pay bills with cash. You need the cash to get about. And hence, knowing cash flow, where the cash is coming from, where it is going, is very key in financial management. We also need to know where to even invest. There are a lot of businesses, they have a lot of cash sitting in their bank account, and you look at it and be thinking, why is this funds, or why is this cash sitting in the bank account, while probably you could have invested it into something that will yield some returns over time for the business. And then financial management to also understand that indeed we are in a very risky environment, especially if you run a business in Ghana. Risk is everywhere. Okay, so please take note that these are some of the things financial management will help you to learn about. Let's move on. So I'll briefly explain what financial management is about. Now, why should we even be bothered as we are on this call, as entrepreneurs, startups, as employees, or even if you're accountant or you're a finance person, why should you be bothered about financial management? I'm saying that if you are a startup or you are an entrepreneur, it is so critical to at least have some basic understanding of financial management, because it will enable you make smart decisions. And when I talk about smart decisions, I'm talking about decisions based on data, not decisions based on your gut feelings and all of these things, because business is a serious enterprise, and hence you need to make smart decisions. Smart decisions can only be made with data, and some of the data that you keep are also financial data that you need. Okay, so we also need to understand that financial management, it matters because, if you want your business to grow and you want your business to expand, you need to understand the numbers behind them. I see from experience that a lot of people just expand their business. Maybe they have a shop at Makola. They heard their friends saying that, oh, maybe Medina market is booming. Then they will come and buy a shop or rent a shop at Medina market without actually thinking through what it means in terms of financial implications and all of these things. So financial management will help. But then, of course, we need investors. They will bring their money. They will bring the network that they hold. They will bring the experience that they hold. But before we can attract them, we need to understand that financial management, you need to understand the numbers. If you don't understand the numbers behind every decision that you are making, you cannot speak to any investor. Okay, you cannot speak to any investor. So it is so important for you to understand the numbers before you can approach any investor, including the banks. And of course, we have to understand that as businesses, we need to be compliant, and compliance means that we need to understand the numbers. If you are entering into a certain business, for instance, you are into agro processing, what is the tax implication? Probably we can have another session on tax and tax planning for small businesses, but for this purposes of this presentation, get to understand that financial management will help you become compliant, especially for those small businesses that have bigger dreams of scaling to the next level. You need to be compliant, because before even you can get government contract and other things, you need to show that you are compliant tax-wise, any other legal obligations that is around you. Then it will help us monitor performance. A lot of businesses in Ghana, especially for startups, we are unable to monitor performance. And when I talk about performance, I'm talking about financial performance, in that how much are you making, profit-wise, sales-wise, how much are you making? Okay, if you cannot track this, then it will be difficult for you to know that you are doing well. And sometimes, for small businesses in Ghana, when they start making some sales, then they get overexcited that they think that their business is booming. But you have not, drilled down the numbers to understand that indeed you are making more money or not. Financial management will help you do that. And of course, it will help you to reduce risk and the waste. There are a lot of risk available on the market. If you want to invest, where should you put your money? We just realized something from the debt exchange program and other things. So risk is everywhere. Just imagine a small business putting your 100,000 cedis into government bond, and government is telling you that thing that he told us. That would be really catastrophic for your business. And so you need to have understanding about how some of these work. You don't need to be like me or to be a finance guru to do this, but at least have basic understanding about them. And then you also prepare for business emergencies and then also downtime. So these are why we need to why financial management should matter to you if you're on this call as an entrepreneur or as a startup. Let's go to the next thing. Okay, now for you as an entrepreneur, as a business owner, or as a non-finance manager on this call, for your business, these are key financial statements that you need to know, understand. You meet them. You might be a board member, but you are not a finance person. You go for board meetings, and then they said we are going to read financial statement for the year, and you are sitting there with your eyes. You don't know what is going on. So this evening we're going to go through some of these things. What are they? When you say, okay, profit or loss statement, what is it about? What does it measure in your business? And how can you go about it? When you talk about balance sheet or what we accountant we call statement of financial position, what is it about? Okay. Then, of course, the key or the master, the cash flow statement, especially for small businesses, cash flow is the blood of the business. And so we need to know what this is about and how we can read and understand them. And so we move on to a little bit of details into them. Now, every business, is you are in business to make money. You are in business to make profits. But how will you know whether you are making profit or not? So we use the profit or loss statement to do this. Indeed, other names you have is income statement. Okay, income statement, but the true word is profit or loss statement. Okay, so we are saying that this particular statement, anywhere you meet it, is to determine whether you are making profit or loss as a business. So how do you do this? Every business will have this, where the monies are coming from. So the revenues, okay. So when you say revenue, you can equate revenue to sales, okay, but you can't equate revenue to income, okay, because income includes, when you talk about sales, we are talking about the core activity. What is your mission? So if you are into selling of sobolo, you do sobolo and sell. The making of the sobolo and the money that you make from it is what we call the revenue or the sales. If you use part of the sales, the cash coming in from the sales to do investment and you get interest, that is not part of your revenue. It is part of your income. So please get to know the difference, because sometimes some businesses, they might not be making sales. And remember, if you are in business and you are not making sales, the business is dying over time, because the raison d'etre or the reason why you set up the business is to make sales, sell so that you make revenues. If your business is getting more from rent, if you are not into the business of rent, getting from interest from maybe T-bills that you have made, but the sales is less, remember that over time you might the business might die. So it is important to segregate the two so that you are very sure. Even for us as accountants, we also recognize that certain aspects of what we call income are not actually physical cash. They are just accounting jargons. Okay, so please take note of these things. Then we need to know your expenses. What are the expenses? You pay salaries, you pay rent, you pay water bills, you pay all of these things. They are the expenses that you run. You need to pay taxes. If you took loans from the bank, you have to pay interest. All of these things feed into your expenses. At the end of the day, when you take your expenses from your from your revenues, then you are able to determine whether you made profit or you made a loss. Okay, whether you made profit or you made a loss. So it is important that you take note. Let's look at a basic structure of how a profit or loss statement looks like. Let's go to the next one. So in most cases, you have it this way. So ABC Limited, if your company's name is Biospace Ghana Limited, you put Biospace Ghana Limited, and then profit or loss statement for the year ended. So always we measure performance within a particular, we measure financial performance in terms of profit or loss within a particular space of time. So either within a month, quarterly, annually, biannually, or whatever it is, we do this. So basically, if you look at this, the structure is that, like I've indicated, you have your total revenue, which includes the sales that you've made, and then you have the cost of sales. Okay, and this is what I'm saying, that depending on your business, you might not have cost of goods sold like this, but the concept is the same. Okay, for example, let's take biospace. Their cost of goods sold probably might include the plantain, whatever that probably they might buy from farmers and all of these things. The labor that will go directly into converting the plantain, whatever, into the crate, and all of these things will be part of their cost of goods sold. The purchases they will make, if you are into, you have a shop at Makola, or maybe you are a service provider, you run maybe you run personal branding shop. Yeah, your sales will come from people who patronize, but then your cost of sales, sometimes, you might probably invest in some form of advertisement on Facebook, on other social media stuff. All of these things will feed directly into your cost of sales, because those are the things that are bringing the sales. So you have that, you take out that from your revenue, and then you get your gross profit, and then you take all the expenses that you have made, that relates to the business. Those that do not relate to the business, you do not form parts here. So if, for instance, you took aspect of the business money, for funeral or whatever it is, that will not be on the surface of that will not be on the surface here, because we classify it differently. So kindly take note some of these expenses, and then you arrive at your operating profits, which basically your operating expenses out of your gross profit, and you take out the taxes that you pay to the Ghana Revenue Authority, and then you arrive at your net profit or a net loss. Now, mind you, when we say net profit or net loss, it doesn't mean that this is the amount of cash. It is not cash. Okay, it's just an accounting term for you to understand whether the business is doing well or the business is not doing well. Because sometimes we make sales and we are happy that we are doing well, but when we drill down the numbers like this, then we get to realize that indeed we are not doing well at all. So kindly take note of this. We go to the next financial statement. Please put me on. Let me walk you through, yes, the balance sheet, or what we call the statement of financial position. Now, if you want to assess the health of every business, okay, this is the financial statement that we use. Okay, so if you're a business owner and maybe you have an accountant or maybe an accounts person, and probably the person prepares your balance sheet for you, the person brings it and you see assets, you are like, what are assets? What we are saying is that anything what the business owns in terms of the things that you use to produce the goods and services, we call them assets. So these are your normally we group them into two based on category, but don't over bother your head. Just know that anything that you own as a business is your asset. So this include the chairs you have, let me use furniture. The furniture you have, if you have a company car, company phone, you have some cash sitting somewhere, you have some investments, whether it is long-term, short-term, all of these things are your assets. You own them. Nobody can claim, ownership to them. And that is why we call it your asset. We use the asset to generate sales, okay? Then you have liabilities. These are what the business owes. So as a business, you might owe your suppliers, you might owe even your employees, you might owe the government, all the other stakeholders, you might owe them. Okay, all of these things are your liabilities. All right. So what we normally will do is that we call it an accounting equation, but don't bother your head. Just understand that when it comes to the business is normally, or the asset is normally financed using your liabilities or equity. Okay, so in simple terms, for you to understand this, if you want to start a business, it is either you borrow or you use your own money. Okay, your own money that you introduce is normally what we call equity. But if you're a bigger business, equity probably can mean so much, especially MTN and other businesses. Equity means a lot. But as a small business owner or an entrepreneur, your equity is just what you have invested into the business. So if you brought a car into the business, if you brought maybe your father's whatever, all of these things can be classified or quantified into monetary terms, and it will be your equity. And then probably you might take some loans here and there. Those ones will be categorized into your liabilities. So the business will be financed through equity and then liabilities. So the accounting equation, normally we position as assets is equal to liabilities plus equity, or sometimes you can say assets minus liabilities is equal to equity. Whichever way it is, the whole idea is that the business, the assets that you have, the cars you have, the building, the inventory, especially if you are into sales, okay, all of these things, how do you get them? You get them by either investing yourself, which is through equity, or through liabilities, which is normally you borrow, and all of these things. So please let us take notes. If you have questions, put them in the chat box. I will respond to them. Let us look at a simple format for yes. So normally you have it this way. The company's name will be written. The type of financial statement you are preparing will be there, and then the period within which the financial statement has been prepared or the balance sheet has been prepared will also be there. So you have the asset as I've indicated. Normally will be grouped into two, both current. Current asset means that these are assets that will last within just a year in notional terms. Okay, and then long-term assets are assets that will last for more than a year. All of these things are there. Then you have liabilities. So your liabilities, these are the things you owe, the claims, by other people on the business. Okay, they can be grouped into two. Those that will be, that can be paid within a year, and those that will be payable after 1 year. And then you have the equity aspect. So take note that where my cursor is, we have retained earnings. So whether you made a profit or loss, they will be accumulated at this side where we call it retained earnings. So this is how your balance sheet is. Okay, so normally when you have your liabilities being huge than your assets, then the business is very shaky. But like I've said, this is also dependent on the kind of industry that you find yourself, because some industries they are asset intensive, some industries are not asset intensive. So kindly take notes of this particular financial statement called balance sheet or statement of financial position. Please, let's go to the last one so we can go into the proper details. Now, statement of cash flow. Cash flow, I've intentionally put the 55 CD and the 11 CD to let you know that cash is the king when it comes to running small businesses. Most of the small businesses will die out because they are unable to pay their bills, and so they fold up and then they start, what is the guy's name? The guy who celebrated his 40th birthday, his firm will chase you all over if you're a small business and you've taken loans from him and you can't pay. And so it is important that you know how to manage the cash flow. So one of the ways managing is to prepare a cash flow statement, which basically will show you, okay, how cash. Here, when you talk about cash, we are talking about Tikana and Kasa, the one that you can use to pay for bills and those things. That is cash. How is cash coming in terms of your sales? How is cash going out? And all of that in terms of your expenses. Normally we group them, okay, but I'm not so much interested in this at this moment. I want you to understand that it will help you, answer even key questions. Do we even have enough cash to run the business? Okay, and over time, when we dig deeper, we will learn about ratios, which basically will help you know, okay, we have enough cash to take care of businesses maybe within a month, within 2 weeks, and all of these things. And I'm saying that all of these things depend on the kind of business you run. Some businesses, they don't need a lot of cash. Other business, they need a lot of cash, things down. Okay. And then I'm saying that the key for small business owners and entrepreneurs on this call is that please, profits is not cash. Profit is just accounting and paperwork. Cash flow is the real money. And so if you're a small business owner, your interest should be more on cash flow than the other financial statements. The other financial statements are really important, but if you really want to know whether you can stay in business and continue to grow and thrive and probably scale in the future, it is important to know that you have adequate cash to run the business. All right, let's look at a sample of a cash flow statement. Well, normally it's like this. Normally they are grouped into 3 forms, okay? Operating activities are the daily activities where the cash is coming in and going out, daily activities. Then you have investing activities. Investing activities, anytime you buy an asset, it's an investment. Anytime you invest in another business, it's also investment. And all of these things, we normally will group them. And then we have financing. Financing is either through debt or equity, one of them, or combination of the two. Okay, so kindly take note of these things. We will delve deeper into this maybe in another webinar. But for now, let's get into this is where the meat lies, especially for most of you on this course. Now that you understand all the blah 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 that I have made, how do you even manage the cash flow for that your small business? How do you manage it? Please take note. If you don't have anything to write, this is where I want you to pay attention. I'm saying that have a plan based on data. Okay. If, for instance, you have your employees, how many are they? How much are you paying them per month? Okay. You need to know how much is going to Ghana Revenue Authority as tax, how much is going to SNIT. Okay. How much is going to how much is going to, providers of services. Maybe you have cleaners in your offices. You have this, you have that. How much? You need that. And you can't sit in your room and conjure these numbers. You need data. And when I talk about data, I'm talking about something that has happened, financial transaction that has happened, that you can, based on it, and make a decision when it comes to cash flow. I'm saying that speed up your receivables. If you're a small business owner, please, the moment you sell, if you are selling on credit, ensure that your credit term is not too long. Okay, you look at it and you think, okay, maybe you go to Yeji to go and bring fish to sell or whatever it is. You need to know, okay, if I come to Accra and I want to sell the fish, okay, how long should people pay? Maybe 2 weeks, maybe 1 week, whatever. Within their months, will they have finished paying so that I can have enough to go to another market and bring more stock to sell? You need to be smart about this. So if you do invoicing, the moment you sell, ensure that the invoice goes. And when it goes, please call the person to tell the person that you have sent it, because sometimes we all do. Sometimes we will receive the invoice and we pretend that we have not seen. You call us, oh, I didn't see this, that. If you're a small business owner, you can't run the business that way. Sometimes you might want to give some discounts, okay, so that you can sell quickly. And all of these things, these are the ways that you can. And indeed, when time is due for you to collect your money, please 2 weeks ahead of time, call the person. Oh, you greet in a nice way. I'm reminding you that the money is due this time. Please, you have to follow up. Then cleverly and wisely, I've said, then you delay payable. So you see, it is quite a very subtle way, because you want yours quicker, but you also have to find a way to delay payment. Okay, I'm not saying delay payment so that you fall into trouble, but at least if you can negotiate for better payment terms, please do. Okay, please do. Sometimes you might want to try and also talk to your suppliers and all of that. These are also ways that you can use to delay your payables. Then I'm saying that monitor expenses. Monitor. How do you monitor expenses? You need to record them. Most of the times we don't record. I mean, I've been an accountant in places. When I went, what they were doing is that when they need money, they walk to the CEO's office and say, oh, Mr. Eko, we have to buy electricity. Just like that. And Mr. Eko will take the money and give it to the person. Where is the record to show? So that at the end of the month, you can track that you gave this amount of money to this person for this and that and that and that and that. So you need to monitor the expenses, so that every month, when you come back to the table, you can then compare where is the money going to. If you are buying a lot of electricity, then you need to question yourself, are my employees overusing the electricity in the office? How can I save even electricity and all of these things? This will help you. And then one of the critical things, and I have found for most Ghanaian businesses, especially those who are into sale of products, physical products, is that overstocking. Normally, we call this in accounting terms as overtrading. You see, it is always when you plan based on gut feelings and all of these things, that is when you overstock. But if you have data to know purchasing trend and the demand on the market for your products, then you can plan. And you can only do this if you have data to know that, okay, normally my product is seasonal. So maybe normally people don't like buying a lot maybe in April, or getting to Christmas, people are getting to Easter, people will buy more. If people will buy more, then I want to maybe stock earlier so that within I can sell in April. Okay, and all of these things you need, because mind you, if people are not buying your items and the items are sitting in the warehouse, you are paying for the warehouse. Probably you might do fumigation in the warehouse, you might do all of these things, and all of these things are at cost. So, I mean, inventory or stock is very, very costly to maintain. And hence, at every point in time, ensure that you have just what you need. And so there are ways to manage it. We have just in time and other stock management practices and best conventions that you can use. Said that you don't really have to put a lot of stock, and then sometimes they will go bad. Sometimes they will steal. Okay, and you might have to probably invest in CCTV cameras and other things to be monitoring. All of these things is cost, and so please don't overstock if you want to manage your finance or cash flow very well as a small business. Then we are saying that always have a buffer, but this one it depends on the kind of business you run. At least you should have a buffer so that you can pay your employees. I mean, as an accountant, it's always a problem when employees will have to come to me and say, oh, Mr. Hassan, and that kind of thing. It's kind of, and normally it's because of poor financial planning. And sometimes it will also be due to the fact that the company is in deep crisis financially, and so they can't pay their bills. And over time, doom is likely to happen. Lastly, in all of these things, I'm saying that for a small business owner, entrepreneur, please separate the business from your personal finances. The business is a separate legal entity from yourself. Even even if your business is in the form of sole proprietorship, like we call it in Ghana, it is still very important for you to separate your business. When you make sales, you don't take a akohumasika from the sales and give it to your wife. You know, it shouldn't happen. You should be diligent and disciplined enough to separate the business, the finances of the business from your personal stuff. Very, very important. If not, it might be difficult to track. So please let us take note of these things, especially for small business owners. Kindly go to the next page for us. Good. Budgeting. See, if you're a small business owner, you are an entrepreneur, or you are even an employee in an office, definitely you need to know a little about budgeting. What is budget? What we are saying is that, you see, we have a lot of plans in our heads. Hey, this year I want to go to school. I want to do this. I'm using this not as a business, but just to give you an idea what the ideas you have. They are just in raw terms. The moment you begin to put money to the ideas, it becomes a budget. The moment you begin to, maybe you tell yourself, okay, this year I want to this year I'll hire 3 people. Okay, so that is an idea. Okay, the 3 people comes at a cost. Okay, when you hire, there is a cost to you as an employer. Okay, so the moment you begin to put cost or assign financial value to the plans that you have made for the business, then you have a budget. You have a budget. Even personally, as someone on this call, you need to have a budget. Okay, what do I mean? You need to have a budget such that you know that I'm to spend 10 cedis on food. So you spend 10 cedis on food. The moment 10 cedis is exhausted, it means you don't have to spend again. Except otherwise, it is so critical. If it's not life and death, then you don't need to spend. You need budgeting will therefore help you to be very disciplined. In most organizations and some organizations that I've worked for, every item there is a budget. The moment you bring an expense, we look, is there a budget line for it? If there is no budget line for it, then we might probably look for money elsewhere to do it, or we will reject it based on how the expense will affect business operations and all of these things. So budgeting is very, very important, that every small business should try and draft small budget. Okay, I spend this on electricity, I spend this on employees, I spend this on this, I spend this on that. And then you are disciplined to ensure that you don't go beyond that, except it becomes so critical that you have no option than to go beyond these things. I have not dealt so much into budgeting here because it is a whole topic on its own that we might need another session for it. Let's look at how that differs from forecasting. Yes, you see, to forecast is different from budgeting, because to forecast is trying to predict what is likely to happen. So probably you decide to say, I'm forecasting for sales that this year maybe I sell phones. Okay, so this year I'll sell like 5,000 units of Samsung Galaxy A55. Okay, so that is what you are, you are forecasting to sell in terms of your sales. But please, you have to be mindful that you don't sit in your room and guess that you sell 55,000 pieces of Samsung Galaxy A55. No, but you need to base it on data. Where is the historical data? What is showing that indeed, even last year, how much sales did you make? Okay, what is the economic condition, inflation, and other things? How is it? What is the economic growth rate? Because if the industry you find yourself is growing rapidly, then your forecasting can probably be more optimistic. If the budget is telling you that they anticipate that the growth rate for this particular industry is like this, then you also have to be mindful. You take all of these things into consideration. Industry conditions, including competitors and all of those things, you need to take into consideration. So you realize that financial management, for non-finance managers or entrepreneurs is something that you can't take for joke. And we don't do it overnight and go and sleep. It is a revolving and a continuous effort Then you also need to know policy changes, legislation, regulation. If you are into money, if you are into mobile money business, you need to understand now e-levy is no more. How is that going to impact on your business? How is that going to impact on how much you are able to make this year and all of these things? These are some of the things that should inform you anytime you begin to forecast into the future. This year, I'll make 10,000 sales. Okay, when you tell me you make 10,000 sales, what is the, what are you basing on? And when you sit before any credit committee in a bank or even a savings and loans company or even an investor, the person will definitely quiz you on some of these some of these figures. If you tell the person that you anticipate to make a sale of 100,000, the person will quiz you. How did you come about this 100,000? Then you need to drill down as to the data that informed you to make such a decision. And forecasting is something that will help you. Forecasting is a very difficult area. Actually, even for us as accountants and finance people, forecasting is very difficult. But nowadays, we have a lot of tools that helps us to do this. So please take note that you need to have an idea about how you can forecast for your small business if you are to run your business effectively. Let's go to the next thing. I think we have some few things to funding and financial planning. Indeed, you need funding for your business. Sometimes in Ghana, it's so difficult for people to approach others for funding because we don't trust ourselves, which for me is one of the fundamental reasons why businesses in Ghana can't grow. There's no trust. But how can we ensure that as small business owners, as an entrepreneurs, we are able to source for the right funding for our businesses? Personal savings is number one. Maybe why you kakra 10 years, 20 years, 50 years, say, oh man, I'm tired. I don't want to work for anybody. I want to start my own business. Okay, do you have some savings sitting somewhere that you can fall on to start that business? So personal savings is number one. Family and friends. Yes, some of us, you might contact your family and friends. Hey, I'm starting this. You explain. He says, okay. My uncle is in Canada. Hey, Canadian dollar. Send you more. Then use it to enter the business. Then angel investors. These are, maybe you approach somebody like Magdan. You approach them and say, hey, I have this. You explain a person. Okay, fine. I'll support you. Then venture capitalists, they are also there. They normally will invest in scalable businesses. Some businesses is not difficult to scale. When you say you scale, it means the business will grow. If for example you were I want to get a typical business that has scaled so much in Ghana. Let me use Chicken Man Pizza Man. The guy, his business, he has been able to scale in terms of increasing both volumes, and other forms of businesses, introducing all of these things into the mix. Such is what we call scaling, and all of these things. Then government grants, this is Ghana. The Ghana government has a lot of small institutions providing grants here and there for small businesses. NYEP, NEIP. These things are there. Then you have bank loans, microfinance. Please be very mindful as a small business owner before you approach a bank or a microfinance for a loan. Please, and let me put this one on record, that if you are a small business owner, please, when the microfinance people come, they tell you that, oh, we will give you 10,000 every week. You pay 1,005 for maybe 6 weeks, for 10 weeks, 12 weeks. Please don't be too excited about these things, because inherently you might be paying triple, sometimes tenfold of what you are taking, because they have no mercy, some of them, because the space is not properly regulated in terms of interest rate and those things. So be very, very careful, especially when you want to take loans from these microfinance institutions. If you are in doubt, you can call on us. Sometimes we might take small questions, but it's always better to be cautious about some of these things than to jump in and then you make a lot of losses. Then we have crowdfunding, which has gained a lot of traction in recent years, but normally is for social enterprises. Those of you in social enterprises, maybe not so much for profit. There is an aspect for profit, and there is an aspect for just providing social services to the community. Then you have trade credits, where you basically speak to the supplier to give you the items on credit, you sell, and then you pay back. All of these things are sources of funding. When you say sources of funding, where can you get the money to start that business or to even improve that business or even to scale? These are some of them. Each of them has its advantages. Each of them has its own disadvantages. But in raw terms, they can be grouped into either debt or equity. Debt or equity. Debt is where you pay interest. Equity is where the person will basically take part of your business. So the person will say, okay, I'm taking 50%, meaning that when you make profit, you give the person half of it and all of these things. Okay, so kindly take notes and let's go to the next thing. I think we should be wrapping up. Now, basic bookkeeping. Please, poor record keeping has been found to be the number one on the record. We don't keep proper books of records. We don't keep proper books of records. So for proper financial management, you need to keep proper books of records. And I'm saying that, please separate your business from your personal finances. If you have just one bank account, which is the same bank account your salary comes in, with the same bank account your sales goes in, with the same bank account you pay your employees and everything, please stop it. From today, if you have not done what it takes to register or have a bank account, please go to the Registrar General today. And the good thing is that they are now online, so you can go there and formalize your business. Formalize it. Don't just be hiding behind and say, oh, it's too expensive. You know, formalizing is more expensive than spending about 2,000, 3,000 to formalize the business. Very important. Okay, then I'm saying that track every transaction. Every transaction I've explained to you. I explained to you what expenses, I explained to you what revenue is, I explained to you assets, liabilities. So you track everything that is going on in the business. Don't give chance to anything, because the little things that you think, oh, wait there, and who here and other things, they will be the reason why your business will collapse. So please let us take notes. Keep your receipts. Keep receipts. Keep them. If you have people at the front desk, ban them. I'm telling you, ban them today from asking employees, do you want receipt? Please, that thing should be banned from your business. The receipt should be issued not on request, but the moment the sale is done, the receipt should go. This will help you track your business. Especially, I worked with a pharmacy, a retail pharmacy business. And it was one of the key things where the owner was losing a lot of money. People will come, the person will make the physician, the medicine counter assistant will make the sale, and they will ask open receipt. You can't ask me that, because I want the receipt for the records. Please always insist. And then you also have to be consistent. Don't just keep records for a few days and think that, you are done. It has to be each day, weekly. Don't wait for the end of the year. And I'm saying that in all of these things, also understand that your business lives in an environment, and the environment protects the business. So you need to know that you have to pay tax. Sometimes small business owners, they are afraid of tax. Please, you can always consult us for tax planning. If you're a small business owner, sometimes it will be pro bono, because sometimes we see future, so we can just give advice and ideas how you can minimize your tax liabilities and all of these things. You have to pay PAYE. You have to pay your SNIT. For these things, you can't, if you hire anybody in your business, please, if you're a small business owner, be very, 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 diligent, so that you pay. You pay these things because you can't. I mean, it is you don't have a choice. It's by law. Okay, so kindly take note of this thing. Keep records. Any tax you pay. If AMA come to your place and give you tickets and all of these things, keep track record of them. Okay, you pay property rate. Keep track record of it because all of these things are your expenses and you need them to know whether your business is doing well or not. I guess we are about to end. So let's go to in all of these things. Now you go to a lot of shops and they use books. They have book when someone buys, they record. Well, it can be a beginning, but nowadays I don't think there's anyone on this call who doesn't use a smartphone. These phones are so powerful; they can do a lot for us. Microsoft Excel, Microsoft Word, all these tools, cloud-based financial tools, they are all on the phones. Sometimes instead of wasting our time on TikTok where we don't make money but we lose money, we can spend time on YouTube learning about some of these things, especially if you are serious about managing your your finances so well as a non-finance manager, as an entrepreneur, or even as a startup. There are a lot of them, accounting tools you can use. My boss, they use QuickBooks. So even if he's outside Ghana, he can look at what is going on, in terms of how we are doing financially, whether we are doing well or not. All of these tools, receipt and invoicing, tools. Some of them they are for free, you don't pay. Some of them you pay as little as $5, and then you'll be able to use it over a period of time and all of these things. And they can help you because most of them are said that once the receipt goes, it records. So you don't really need a lot of accounting persons to come in and all of these things. So please, as part of managing our finances well, as non-finance managers and entrepreneurs, business owners, and all of these things, please let us involve technology in managing our finances. A lot of the books that we keep, notebook, no kakraka than the office. Now, obi betumi ate sheet no keke no de call. Then you can't even find find it and even use it to track your business. And I'm telling you that for those of you dreaming to scale your businesses, these records that you need to keep will be very, very handy in the future if you have to meet any person for funding and all of these things. So let us take notes of these things that I have shared with you tonight. They can be the catalyst that will take your business to the next level, or it can be the reason why your business might go down, especially if you do not adhere to these things. Let us see what is next. I guess this should be the end of the road. Great. So tonight we've taken time to go through some basic, some basic things we can do to manage our finances quite well. And I hope that you have learned a thing or two, and you can also implement same when you visit your business. At this moment, I think I'll leave the floor for a call, and then the questions that we have, we can bring them up and I will respond to them.
My brother, wow. Charlie, sometimes we feel that we are not making enough money. So what's all this? Let's wait till we make some substantial amounts of money. I have had clients that feel very embarrassed, even when we tell them things about, Charlie, put your books in order, let's have, your records done for you and things like that. They feel genuinely embarrassed because they feel like, oh, they have not made enough money, so then what's the point? Can you speak to like how much does a person necessarily have to make in their business for them to start putting these things in place, for them to start doing their financial records, cash flow statement, balance sheets, and all that? I mean, can you give us an idea of how much? Because I'm sure you've
no,
also encountered that. where people feel
Come
embarrassed
on,
because
come on.
uh,
See, let me tell you for a fact. The moment you conceive the idea that you want to start a business, that is the very moment you need to start recording everything. I'm telling you because see, if you want to wait before you start recording, I'm telling you that by the time you want to start recording, it will cost you more to record than if you had taken your time to put in these simple structures, simple books, and all of these things. And sometimes I've been contacted, hey, I want to get a loan from this. They said we should get audited this, da, 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 da. You ask the person, do you have any records? The person tells you no. Then I'm like, how then do I prepare something for you to present to, an investor or a bank? It won't happen. So the moment you conceive the idea that you want to start, your business, you need to start putting in this structure. Don't wait till you have made a sale before you say, hey, as an said, so we have to start, putting in things. No, that will be more expensive to do.
Okay, great. Thank you so much. I think we have a few questions. Abraham's hand is up. So Abraham, if you can unmute yourself and speak. And then if you also want to ask a question, please raise your hand so we can call you. We have just about 10 minutes to leave. So Abraham, please, you have the floor.
Please, I want to ask, in the world of AI now, can we also integrate AI in some of these bookkeeping and these financial instruments so that we can keep our house and our businesses in order?
Yeah, well, my response would be yes, but you also have to be mindful that because before you use any tool, you need to be a master of that tool before you use it. Other than that, it will just be something fancy AI. You can skip AI for now and just use the normal tools that we know. But yes, indeed, if you are someone who is more technologically savvy, you can actually introduce it to help you run the financial management aspect. But I always say that AI normally will give you generic, ideas. They normally don't give like tailored, suggestions and all of that. So even if you are seeking something from AI, ensure that you also subject it, you contextualize it so that you don't take just anything from AI that you are using it to run your business.
Okay, great, great, great. All right. So do we have another question? And then please, you see, AI, if you like my friend said, if you understand it, it becomes a useful tool. But if
Yeah.
you don't also understand the fundamentals of what we are teaching, right? As for AI can lie. See, AI can lie so much that you will be convinced because you don't know what AI is saying. And sometimes it gets very fascinating. Like they can lie. So it's good to have that basic understanding. And also that's the
Yeah.
reason why accountants get to, run away with people's money because you don't understand what they are saying. So it's good
Yeah.
that some of these workshops are being, organized. I
Yeah.
see Israel on the call. Thank you so much for making time. Do you have any questions for Dixon, please? This is free consultancy. We just have 7 more minutes. So let's take advantage. If you have any questions, please ask him. I know that you mentioned pro bono and all that. Okay, let's go to Fatimata first. Then I'll ask my question. Fatimata, please, you have the floor.
Thank you. Thank you so much, Mr. Dixon, for the wonderful presentation. Yeah, so on bookkeeping, we have a small startup. So for our outflows, we do well with that. But then with sales that we are making, you just mentioned that every little thing we should, put it down. We do record that, okay, so this person has bought this small thing. Usually a unit is like 30 cedis of our product is about 30 Ghana cedis. So we do that backdoor and then we keep those information. The sales we have made over the period has not been put into the bank. you mentioned auditing. So if I want to audit our accounts so far, will I have to bring hard evidence, as in put it somewhere, then you know that, okay, I actually sold this and I have put it in the bank, or like a company's account before you can audit for me? Or if I bring you the records of the sales we have made over the period on paper, that can be done. Thank you.
Thank you so much.
Okay, so I'll answer this in two. I see two things here. First of all, as a small business owner, once you make a sale, like I've told you, if you have bank accounts, which I encourage you to have, ensure that the money, regardless of how much it is moved into that bank account. You know, common thefts in the office can actually collapse that business. So ensure that the small business, the small sales you make, if you do Momo, put it on your Momo, ensure that it is transferred eventually to the bank. Now, in terms of audits, we only audit based on records, because we are ascertaining that what you are telling the world is what actually it is. And so if you tell me that you don't have the money in the bank, but you have the records, I will take it. I will take the records that you have. But I also want to know the cash. Where is it? Do you have the cash that I can verify to know that indeed the cash is sitting somewhere else? It might be that you might have spent it on other things, but I want to see. I want to know the movement and all of these things. Once you can provide this data, then yes, we can prepare your financial statement for you and authenticate it as audited, so you can use it for whatever you want to use it for.
Okay, so I think Perfect has a question. Perfect, if you can unmute yourself and speak.
Okay, thank you, sir. Please, my question is concerning the bookkeeping. Per my business, I'm an event caterer and also a milliner. But then my problem is I always do reinvestments. Let's say I've just started with the catering. It's not that new, but then I'm still investing in it, as in the asset that I use in cooking and other things.
Mm-hmm.
So in this case, I usually reinvest, like the profit that I get, I reinvest into the business. So always, even though I have the things there, but then I don't have cash in hand. And mostly in the millinery aspect too, I mostly invest my personal money into it.
Yeah.
So mostly I don't separate my personal finances from the business, because whatever money that I get, I don't just save it as my personal money. I just reinvest in the business. And because of that, I take in money as in when I want. So I don't know how I'm going to do it, since should I say the business is new, or the business hasn't gotten to its peak or something. So I always add my personal money to it, so as I take it as in when and how I need it. So in this case, how am I going to do it?
Okay. Thank you. So perfect. The first thing you need to recognize is that the business, it should be separated from what you do as a person. And so you can have a separate, do you have a separate bank account for the business and yourself, or you just
Yes,
run everything?
please.
You
No, I
have it.
have. Yes, please.
Okay, good. So if you have it, then what will happen is that if you make a sale, maybe you go for an event, you cook and all of these things, you make a sale, you put into the account of the business. Now, because as an entrepreneur, you have to be investing some of your personal capital, which is your personal monies, into the business. It is always advisable to keep records of these things. Keep records of them, because if you are looking to do bigger events, it means sometimes you might have to bring others into the business, and then you need to value how much you have actually put into the business. And in most time, people can't tell how much they've invested into the business because they were just putting money, you know, taking money out of the business and all of these things. You need to, I mean, begin to separate them. And then once you put in any of your monies, record it. See, at this moment, I think it will be more. I mean, it will be more beneficial. Echo, what I will do for her is I'll give her free pro bono consultancy around it so that she can properly organize. If I want to break it down now, we might go beyond our time. So, perfect. You can take my contact from Mr. Mensah, and then let's have a conversation and I'll show you the way.
All
Okay,
right.
yes, sir.
Thank you.
Thank you very much.
Okay, thank you so much. Perfect. All right. So we have a few questions in the chat box. Nanekia says, please, as a small business, what do you do if you want to go international? I mean, exportation. All right, so Nanekia, we would put a webinar on that together for you. Okay, so you can get some more insights. But then when you're looking at the financial side, I'm sure um, Dixon would be more than happy to help you put your books together.
Yeah.
And also you should visit Ghana Export Promotion. Is it authority or council? I'm not even sure what they are now.
It's a
But
council.
it's okay. So the Ghana Export Promotion Council Authority would give you more insights because they even have an exportation school that trains businesses who want to do exports. But I promise that we'll put something together so that you can get a bit more insights on that. Let's say the on audited financials, must it always be from January to December, or it can change due to the request by donors or investors?
Yeah, so in Ghana, the accounting period begins from January to December, especially for small businesses. So kindly take note. But for other businesses, like bigger businesses, they can decide. I mean, they can decide when their financial, period starts and when it ends. But for small businesses, or what we call the sole proprietorship businesses, yes, every business, your financial statement or your financial period starts from January and ends in December 31st.
Okay. So thank you so much. We are wrapping up, but Nelson is asking, thank you so much for this session. This is the first time having such an important business forum. My small business is just less than a month old. I'm fortunate to be joining this session. Oh, okay. All right. Thank you. Thank you, Nelson. It's good that you're having this information from the beginning, so you do the right thing from the very onset. Joshua, what do you do when a refund comes? One is not responding to, and but you feel he or must disclose that. Joshua, I'm not getting your question. So if you can unmute and then ask yourself, I'm sure it will give us some clarity. All right, Liz says, what if the business didn't start in January? So,
yeah, if it didn't start in January and let's say it's starting in April, then obviously it's from April, whatever date it started, to 31st December 20, whatever year that you find yourself in. So kindly take note. But the thing is that is for sole proprietorship is from 1st January to 31st December. Okay, that is what we have when you enter into the company law or what the Companies Act, previously the Companies Code. Okay, that is what we have in there. Yeah.
Okay. All right, guys. So I don't see any more hands. I think we are good to go. We'll definitely invite Mr. Hassan back because he needs to go deeper. And he also needs to help us with the taxation and getting us to understand taxes. So definitely, please, we are Oliver Twist. You know, at Ember, we ask for more, especially when the session has been so insightful. But we want to extend our appreciation to you, Mr. Hassan, for making time to join us today. It's been a very insightful session, and we'll definitely continue the series with you. where we go deeper into, source of financing, we go deeper into taxation, and then how to actually put structures and systems in place. And of course, since we are business people, I believe that we'll also be asking for some discounts for the members of EMBA that might want your services. So guys, we'll send you a list of all the things that Mr. Hassan can do for you. And then when you contact him, I'm sure he'll be generous enough to give us some discount. So thank you so much, my brother. You look sharp. Thank you for the dedication.
Thank you.
We'll definitely get back to you.
I'll be so glad to dig deep, especially in the area of tax, budgeting, forecasting, and then putting small, like what we call controls, small controls, so that your business will not, like, people will not steal from your business. You can account for each and everything that the business owns. So yes, I'll be glad to have these sessions.
All right. Thank you so much. Please, can we just give him a round of applause in the chat box? Just thanking him for making time. He's a family man. Like I said, he doesn't waste time. I'm sure he has to go and get the third one out. So, Mr. Hassan, thank you. Thank you. We are grateful. We are grateful. Thank you so much. We'll definitely get back to you. And for all of you, please enjoy your Easter holidays. And we'll see you same time, same place next week, 7 p.m. God bless your business. God bless the work of your hands. And then please continue to get wisdom and knowledge and run the business right. That's the legacy you're definitely leaving behind. So all the best. We'll see you next week, same time. Bye-bye.